Hello everybody, we are doing a full update and today we are going to look at my TFSA $40,000. I'm down $4,762. I'm 10.5% down. It's rounding it to 11%. This is the most that this portfolio has been down since I started. So we're going to look at the 1 day, and on the 1 day I'm up 0.5%, which is a little weird, and we'll get into that a little later. I'm not too sure if I don't know what Wealthsimple did, but that just doesn't seem very accurate. On the 1 week, I am down 1.8%, $700, almost $800. On the 1 month, I am down 3%, or $1,243. On the 3 month, I am down 7.71%, or $3,362. On the 1 year, or thank you, talk. On the 1 year, or the all-time, actually on the 1 year I'm down $5,322, but on the all-time I am down $4,762. Actually pretty bad on the 1 year. Nice. $5,000 down on the 1 year, so we're looking pretty good. Let's talk about it. Total value right now, I am down 3.9% in Apple, which I would love to be buying more Apple. I'm going to wait a couple minutes, but wait a couple days, if not a few months, to watch what Apple's going to do, but that is something that I've been looking towards. Algonquin Power, I'm down 19%. Alibaba, I am down 36%, which is actually, it's actually up. Berkshire Hathaway, I am up 3.9, so 4%. Caterpillar, my single stock that I have, I'm up 13% on. Dream Industrial, I'm down 11.6%. Dollarama, I'm up 48%. Empire REITs, I am down 9%. Googl, I'm actually down 27%. Googl is something that I bought this week. It's something that I love the company, and it's been falling. It's at I think a PE of about 18, and even though there's a bit more pain for it, I would just love to buy a bit more Googl. It is by far the biggest single stock position in my portfolio, and I would love to keep it that way. Googl is just a cash machine with no debt. A cash machine with no debt. It stands right up there with Apple, and I think that it is less looked at than Apple. And that shows because a PE for a company that's still growing with moderate success, very successful growth, up until they increased interest rates. Now, as it's fallen, 27%, and I started buying it at about 10 to 15% down. So as it has fallen, I have bought a few more. I did buy my shares pre-split, so I paid, I think, $2,700 for my first share, and then $2,500 for my second share, and now I've bought 5 more shares. So my average is on Googl. My average is, what would you say, $119. So about, what would that be, $3,000 per share, just about. No, that'd be $2,000 per share, just about $2,000 per share. So I'm not too worried about it. Just a company that I will continue to average in on, and that's great. That is fantastic. I love Googl as a company, and I will happily put more money in as it goes down. It is 15.34% of my portfolio. Home Depot is, again, something I've been watching. I do believe that I have prices set. I believe $265. So we're actually coming down to the area that I would consider buying more Home Depot. We will take a look again. I do believe housing is coming down, so my ideas as interest rates rise is Home Depot's going to see a backlash on that, but it won't be for a while afterwards. So Home Depot is not going to be a leading expectation of the housing market. At least I don't believe so. And, for that reason, I'm just sitting on my 1 share. Intel, down 22.15%, just something I've been holding on to. I'm at about 3/4 of a position on it, so I could use another 25 shares, but I will do that later when the business has proven to be more than what they have been. Obviously don't buy on the way up, but I'm happy to just sit on what I have with the company. So I won't be putting too much more into Intel. Meta shares, 10 shares. I have almost $2,000 in Meta. I'm down 51.83%. Definitely my worst stock that I've had so far. So we're just sitting there, we're waiting. I still believe in Meta. I believe in Facebook, which was the old platform. I do not love the decision that the company's headed in, but I am willing to stick it out. Mark Zuckerberg has a great track record, regardless of what mistakes have been made, or if any at all, really, because they've kind of said that this was their plan all along. So I know what I signed up for, and I am sticking it out. A little bit of conviction. Manulife Financial is one that I bought last week. I now have 40 shares, or $904. I am down 0.5%. I'm down $5. So, damn. Microsoft, I am down 23%. Something that I should be looking into, because I would like to pick up, probably have a total of 5 Microsoft shares. But I will be waiting for that to come down. I do believe that it is still overpriced, even at the PE ratio that it is. It is a fast-growing company, however, so I am keeping my eyes open, eyes peeled on Microsoft. When Apple starts to turn around, Microsoft will likely to follow. A rising tide lifts all boats, and I'd love to have a bit more Microsoft during the downtimes. So those are, maybe they are quickly upon us. Maybe I should be looking into it right now. But, I just got to do a little more research on that. NEWT, I'm just letting that guy sit. I'm not doing anything with NEWT. Nexus REITs, 9.6%. Oh, NEWT's my dividend stock. So I have $1,000 or half position. I'm just going to leave it. Nexus REITs, I have 9.6% down, or $97 down. A company that I've been trying to average down to about $8.50. So right now my average, I believe, is 9.61. We got to bring that down $1, and if this reached $7.50, I would gladly dump my other half of the position in. So that again is another dividend play, and I'll bring that up to 2% later, at the same time as Dream Industrial. SRU, a company that I'm just leaving, a huge market cap, a lot of money flowing through it. That's something that I'd love to put into my personal account, but not something into my TFSA. So we're just going to leave that there. VIG is just an ETF. I'm just leaving it. I don't really have a plan for it, and I think that if I just hold on to my shares and not touch it, it's not doing me any harm by being there. I mean, you could argue that I should put my money elsewhere, but I don't see it. I just see it as money that's in play. I don't see it as like a great contender, but I see it as something that will do well over long amounts of time. Walmart is a stock that has been holding up very well throughout this. I'm up, actually. I'm up 6.4%. So, I only have 4 shares or a quarter position. We're working on building a position. I was sleeping on it when it fell by a large amount. I don't know if I was sleeping on it. I'd have to go back, because I do believe that I bought a bit more at 132. I believe I bought it at 125 as well. So I have been averaging down on Walmart. It's been doing well for me. XEQT, I have 437 shares. I'm down 9.31%. Something that I actually should be looking into and should be averaging into, because it only makes up less than 30% of my portfolio. So if we go up to Berkshire Hathaway B shares, which is my other ETF that I treat as an ETF, I am up actually 3.97, so 4% I'm up, and that is another 12%, so 42%. So 42% of my portfolio, plus VIG, which is another very small amount, 42, so 45% of my portfolio is in ETFs. I would like that to be more. I'd like that to be at least 50%, if not 60%. So, by all rights, I probably should be dumping a lot of money into XEQT or Berkshire Hathaway B shares. I would like to actually buy more Berkshire Hathaway B shares at 275 again. So I don't want to increase my average, but the longer it holds that same value and doesn't significantly drop from there, the more likely there is a chance of me buying more. So if I like it at 275, and Warren Buffett likes it, and some insiders like it at 265, which is really not that much further down. So I will be looking out for Berkshire Hathaway B shares and XEQT, because I should not be sleeping on making sure that my portfolio is what I want it to be. Anyways, moving on. Lately, what's my activity looking like? I bought Googl. I got dividends. I got $1 from, on October 31st. So not a lot's changed. Not a lot to talk about. Just been waiting, sitting on shares, and biding my time, looking for deals. Now, if we go out and we go to Webull, on Webull, we have quite a lot of green stocks. Red, but green. So my average on Wealthsimple was down, I think for the day it was only up 0.5%. But, it looks like my average was quite a lot more than 0.5%, Even XEQT went up more than 0.5%. So I'm not too sure what, Wealthsimple's been doing, but it doesn't really add up. I'm not a mathematician, but that doesn't make any sense. Anyways, guys, this is, I guess, a little afterthought here of what I do when I'm looking at the stocks that I own. I go on Webull. I check on Alibaba. It brings me up my feed. I like to look at what people are talking about. Honestly, it's usually hilarious discussions. They are fun. I do not really let them influence me, but I do like the news station. So I do take that into consideration. I do like to look at the analyst ratings. I do like to look at the company. So, just looking at Alibaba in this case, I was looking at, or someone who I was looking at was Home Depot. What has Home Depot been doing? When are their earnings? So obviously the 15th. So in 10 days, 11 days, we're looking at the earnings for Home Depot. That's great news. Those are things that I should be looking out for. And, if I go to my chart, I can see, and if I go to the 1 year, I can see that I did set a target. I set it for 258. So it'll notify me when it hits that target. So at 258, I was looking to buy Home Depot, and I can look at the PE at 258. That would be probably like a 15 PE. It would have about a 3% dividend yield for home hardware by then. Excellent news. I'll gladly pick that up when it goes to what I would like. And if it doesn't, that's all right. We got many other stocks that I'd like to look at that I would like to buy. So anyways, guys, that's just a little bit about my process, as well as how my Wealthsimple account has been going so far. Worst week I've had to date. So, unfortunate, but I guess fortunate, because I get to buy a few more stocks. Anyways, guys, I'll see you next time. Bye now.